Hello, everyone. Today on the final bar, my guest is Jay Soloff from Investors Alley. He's going to give us a particular options trade in the airline space. It'll be interesting to hear him talk about the mechanics of how and why to set that up. Now, we'll talk overall about this market more in distribution mode. This started yesterday with, certainly some distributive patterns in the afternoon, following through with a gap lower today. One of the 11 S&P sectors finishing in the green. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market activity using the power of stock charts, using data visualization techniques to understand market dynamics. I would argue that the chart is the best way to get inside the head of all the other investors out there. If you want to understand what people are thinking and how they're voting with their capital, the chart can show you through the message of price itself what is happening. We have a great toolkit in technical analysis to try to understand price momentum, understand trends. And as our founder, Chip Anderson, has told me early on, right, the goal of an investor is to identify trends, to follow those trends, and to anticipate when those trends are exhausted. And hopefully through our time together on this show today and other days, we're able to help you answer those three questions on your own. Now, we have some great guests. I'm excited to talk to Jay Soloff a little later with a covered call strategy to review. Tomorrow, we have Bob Lang from Explosive Options joining us once again. And then on Thursday, the 13th, Chris Brecher from Brecher Trading coming back on the show. Next week, on Tuesday, the 18th, we have Joe Rabel from Rabel Stock Research. He's one of my favorite stock pickers, does a great job on Your Daily 5, one of our other shows on StockCharts TV. So we'll hear some of the tickers that he's looking at. Also, last chance to join me for the Money Show. I'll be speaking at the Money Show Virtual Expo today and tomorrow. I'll actually be speaking there tomorrow on Wednesday, May 12th, around 1:30 p.m. Eastern. My presentation is called 3 Ways to Upgrade Your Routines and Improve Your Returns. I've told my own clients and anyone who will listen for years that a consistent imperfect routine is way better than an inconsistent perfect routine. It's not about optimizing what you're doing. It's having a consistent time and place and pattern, a procedure of going through and reviewing the important information to you. And what we're going to do is look at my own morning coffee routine. I'll talk through how I go about understanding the markets or updating my views on the markets every morning. And hopefully it helps you to think about your own investment process. So go to moneyshow.com to sign up for that free event. I'll be speaking tomorrow. Let's get to our market recap. First, I did want to bring up a poll that we had recently. We always have a poll going on our StockCharts TV page, also through social media. So if you see that pop up, answer the poll when you can, and helps us to think about what you're looking at, what you're reflecting on, and it helps us to hopefully make the shows a little better for you. We asked you recently, how often do you use point and figure charts? Every day, a couple times a week, a couple times a month, or what's a point and figure chart? 36% of you answered that one. What's a point and figure chart? The next most common was a couple times a month. The least common response was a couple times a week. So, it's interesting. What that shows me is that about 62% of us either never look at point and figure charts or very rarely. And it's funny, as I'm sending this poll around and looking at the results, if you follow this show regularly, you can see that I actually bring up point and figure charts very rarely. And I think the reason why I don't is because there's a bit of a learning curve, only because if you're not used to looking at some of those charts, it can be a little bit of an adjustment to try to make sense of them. An easy way to make sense of it, though, by the way, if you ever want to, is bring up a ticker, and instead of doing the regular sharp chart, go to where it says gallery view, Type the ticker in here. We'll do SPY just so it's something we're all familiar with. Now, these charts are all customizable, but you'll see you have a standard intraday view, a daily view, a weekly view, and then the point and figure chart. And what's really helpful is if you look at the daily and weekly charts and then look down at the point and figure chart, that is the way that I learned point and figure charting, was actually looking at the bar charts and then hand drawing point and figure charts. And the real way to learn it, by the way, is to read a meaty book by Tom Dorsey or Jeremy Duplessis. Those are the two gentlemen that wrote the books that I read on point and figure charting, and follow their instructions, which I think both of them suggest drawing them by hand and putting the X's and O's on a piece of graph paper. That is the way you really learn how to interpret and analyze point and figure charts. Look at the bar chart and then transfer it into a hand-drawn point and figure chart. By the way, as we get to our market recap, one of my favorite memories in my Fidelity days was Louise Yamada coming up to visit us in Boston and unfolding this huge wall-sized point and figure chart for each Dow stock. And she went through each one of the 30, and she'd be hand drawing and updating these point and figure charts for years and years and years. And it was just a lot of fun to see how the price movements had evolved over time. Markets today, by the way, the S&P down almost 1%, closed down to 4150, just above that. And really most of that came right out of the open. You sort of gapped down, at the beginning of the day and sort of chopped around in that range through most of the day. So the damage had been done. There's a bit of a recovery on places like the NASDAQ, which were able to reclaim yesterday's close, but still finished sort of flat for the day. So overall, this was certainly a story of distribution. The Dow was the worst of sort of the three big indexes. And as you can look at these sector movements, you can see energy, financials, industrials, the three weakest sectors. Those are more heavily represented in the Dow than something like the S&P or the NASDAQ. So understandable that those would be down quite a bit. The VIX, by the way, is at a new all-time high. If by all-time, I mean in the last month or two. The VIX has obviously been relatively muted. It's been in the upper teens for a while. A more normal range for the VIX is getting up into the 20 to 40 range. That was normal through much of 2020. After the March market low, when the VIX spiked up into the 80s, it came back and settled back in between 20 and 40. So we're back into that range. And I would expect, given the dynamics that we've seen, given the sell-offs that we've seen in stocks, and the movements, I would expect volatility to be a little more elevated than we've been used to in recent months. Looking elsewhere very quickly, 10-year yields continuing to go back higher, with the TNX around 162. The dollar, by the way, flat from yesterday. There hasn't been a lot of movement in the dollar index, to be honest with you, in a little while. Gold actually finished just narrowly positive, but it was a big down day earlier in the day and sort of reclaimed most of that through the course of the day. Commodities overall up just fine, up about 1%. So energy actually weaker on higher commodity prices today. Cryptocurrencies overall all in the positive territory, with Bitcoin spent most of the day negative, but actually reverted back higher, pushing up toward that 57,000 level. Once again, Ethereum, by the way, continuing to outperform Bitcoin, which has been a trend for a little while. Let's look at a chart of the S&P 500. I was interviewed a little earlier for Kiplinger's and was asked to talk about the overall environment. And one of the charts I shared was something similar to this one right here, which is basically the line in the sand chart. I'm a big fan of lines in the sand. Levels, price levels, signals that you identify ahead of time. You don't wait until something sells off to say, okay, that was what I was waiting for. When things are good, when the S&P is making all-time highs, you look to the left on the chart and you look for key levels at which you would decide the trend is no longer higher. For me, that level for the last couple of weeks has been 4120. That was the low from mid-April. And I see the market evolving in patterns of highs and lows and looking to see if highs keep getting higher. That means we're in an uptrend, which we do keep doing. All of a sudden, we start to make lower highs and we start to make lower lows. A break below 4120, which we just narrowly did today, but did not close below there. So this does not count as a breakdown just yet, in my opinion. But closing below 4120 later this week would certainly indicate a lower low, a lower high if we would bounce higher and remain below 4240 or so, which was the peak from last Friday. That would certainly confirm an overall rotation lower. The real support after 4120, it's this confluence of support levels, which is currently around 4050. This is the 50-day moving average, which is where the S&P has pulled back to a number of times in the last 3 or 4 months. Also, a trend line using the October low and the March low lines up right around to that same level. So I think around 4,000, to 4050 is really the next level down. We break that, and you will hear me start talking about deeper support levels. And it's these shaded areas going back to the March low, going down to the 200-day moving average, and the first quarter lows going down to 3,200 to 3,250, which would be the fall lows from September and October. But again, first things first, we've had our bearish divergence. Do we break the swing low? We almost did it today, but did not do it. This ended up being a bit of a doji candle, or open and close are right about at the same level. Usually that means a bit of a bounce. But overall, I would say the trend is still positive until proven otherwise, and that's 4120 would be the line in the sand I would be focusing on. So what actually worked today? We've talked about steel stocks randomly, charts like NUE. One of our 3 and 3 charts yesterday was the steel index. NUE, Nucor, is one of the biggest stocks there in that sector, and one of the more highly rated stocks. These are stocks all making new highs. New all-time highs again this week in strong uptrends. So when I screened for new 3-month highs earlier today, there were a lot of material stocks, and materials is a real small sector in the S&P. So if there are any material stocks on a screen, I kind of take another look. But things like, a gold stock made it on the list, a bunch of materials, steel names, and others all sort of in that new swing high list. So an interesting basket of stocks to pay attention to. A number of these sectors have had really good runs in industrials in particular. I'm thinking of some of these infrastructure plays that have done very well. Not unrealistic to expect a bit of a pullback, and I think that was a necessary, if not a needed move lower. Just to finish off here, just one chart to pay attention to. Biotechs have been one we've not talked about a lot because the relative strength has been so dismal, right? If you look at the chart of Biogen, made a new 12-month relative low about a week or two ago. However, you can see it's now reverted back to the upper end of this range. Seeing biotech stocks actually recover their most recent swing highs, it's put in a higher low. Can it make a new swing high? I think a chart like Biogen is right at that point where you have to start taking it seriously if it's able to recover that. But first things first, has to get above there and get above RSI 60. That's where it's topped out a number of times recently. We need to take a quick break. We'll be back with my guest, Jay Soloff. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show as we debrief on the market activity using technical analysis, using the power of charting. As a reminder, we're doing another mailbag segment later in today's show. We would love to hear from you and answer one of your questions in our next mailbag segment, which is coming up on Friday's show. Shoot us an email, thefinalbar@stockcharts.com, with any questions that are coming up in your own process. You can also look us up on Twitter at FinalBarSCTV. Finally, on our YouTube channel, just put a comment right below the video that you're watching. We would love to hear from you, hear your questions, get your feedback, and hope to answer one of your questions in our next mailbag segment. Also, as a reminder, StockCharts TV on demand is available for you for free. Go to StockChartsTV.com, use your email, set up a free account. You can start accessing all of our great content from our wonderful team of hosts and also great guests like Jay Soloff coming up here in a moment. So go to StockChartsTV.com to set up a free account. We're also on all the app stores. Just search for StockCharts TV on demand. I want to welcome on my guest, Jay Soloff. Jay is coming to us from the Phoenix area. He's the lead options analyst at Investors Alley. He's been on the show before, and we really enjoyed his take, thinking about how to apply an option strategy in different environments. Jay, welcome back.
Thanks, Dave. Appreciate you having me.
So you've brought an example with you in the airline space. Airlines have been one of those groups that I feel it's been hit or miss. At times, it's felt like these things are going to start ripping to the upside, like you saw in earlier in the year, and then they sort of come back to earth and are chopping around. You're starting us with American Airlines. Talk us through this example.
Yeah, and airlines, it's one of those things that sometimes they can be interesting. A lot of times they can be boring. And if you look at this, you might look, well, what's the opportunity here with American? I mean, we already had this huge run up, right? As the vaccines started to roll out, you saw airlines recover, and this is pretty much, true across the board for the major airlines. And it's already gone from 12 to, 25 and then settled back down. So you're like, well, what can I do in a situation like this? Oh, well, maybe I can hold it, for for even, obviously it's not back to pre-pandemic levels. It was in the 30s or high 30s, mid 30s. And so, there's some upside. Well, maybe I can hold it for a while and collect a dividend. Well, unfortunately, they've slashed their dividend to nothing. Used to pay 10%, or I'm sorry, 10 cents per quarter, and now, which isn't a lot to begin with. And then when COVID hit, they completely slashed their dividends. So you're like, well, there's not a lot of benefit to holding American Airlines. We're not sure how long it'll take to recover. It's already built in to some extent. So to me, I look at this, I'm like, this is a perfect situation for a covered call. So that's when you buy the stock and then you sell a call against it. So one call for every 100 shares. And it's a basic strategy, but honestly, it's almost so commonplace now that it's underrated. Like I actually believe that covered calls have gotten to be, like one of the ways that people learn option trading. And it's like to the point where it's introductory, and we're like, well, how powerful can an introductory strategy be? Well, it's actually, it might literally be the best bang for your buck of any option strategy out there. And so I was looking at airlines and I'm like, American it's almost ideal for a covered call. So you're buying the stock. So just think of the stock part by itself. Already, I feel like there's a decent floor on airlines and American in general, because we have the summer travel season approaching. All indications are that airline travel is picking up for the summer. Bookings are up. So there's probably a floor. However, we kind of hit that, that growth has already kind of happened. Leaving the pandemic sort of growth has happened. So you feel like there's probably a ceiling for the time being on how high it can go, but also a floor. So not a lot of risk in owning the stock. Then you throw that short call situation in and you can earn a yield, which is not only better than a zero dividend, but better than just about any dividend you're going to get from any stock. So, you look at here and you have, let's say you even think it's going to 24 or 25 as a cap. We can do some pretty good things with that. So I have some option prices and I can show you the example here. So we're looking at June 18. So that's not about 5 weeks, not quite. So I try to do them about 30 days out, sometimes up to 45 days. So if you look at the calls out in American with a stock around 22, then you see, 24, 25, we're talking about, let's say you just sell them at the bid, 60 cents and 40 cents. If you do the math on that, this is around not quite a 3% yield. And this is about a 2% yield. And then, each one offers a little bit more upside potential. So if you think it's going to 25, you have between the yield and the stock appreciation, you can make maybe 15%. And this one's closer to about 12%, but you're guaranteed a little bit higher yield of about 3%. So depending on where you think it might be going, you're buying the stock, you're selling one of these calls. Let's just say the 24. That's probably what I would do personally. I like to have that higher yield. You're getting 60 cents no matter what. You get that up front, right? And that is about 3% yield. And so it's like getting a 3% dividend in a little over a month. So we're not annualized, it'd probably be about 30%. You think about 30% annual. I mean, that even in a higher rate environment, that's a good yield.
Not bad, right?
So you do it every month. And then this also gives you a chance to make a couple bucks if it does go higher. And again, I like this because I think there's a floor. I don't think there's a lot of downside in airlines right now because we're coming out of the pandemic. So to me, this is just a great trade. Earn 3% in a little over a month, have a little bit of upside exposure in American and not a lot of downside. So I really like this trade. I feel like I've actually seen a lot of volume in a trade similar to this, like some block trades, which is also a good sign. It means that you have some professionals doing this sort of thing as well.
Right. I love how you laid this out, and it's a great illustration sort of on the strategy. And I'm often, talking to a lot of options experts over time, they often refer to the covered call as a great introductory, as you mentioned, sort of a great introductory approach to get you to understand a little bit about the dynamics of it. Can you tell me this, like, what's the risk on a trade like that, right? Is there something that would happen to AAL that would make that all of a sudden more of a frustrating trade, or how would you think of the risk side of that?
So your risks are generally two-sided, right? The same, you're owning the stock. So, you have the same risk as owning any stock, which is downside risk. So obviously if there's let's say there's a mutation of COVID that comes about and airlines have to shut down again or whatever, obviously that's a risk. I mean, that's a risk pretty much across the whole market though.
Sure.
Not, airline specific risk, I would say is, fuel related. So another Suez Canal blockage, or, there are some things that could cause airline risk in general. The covered call won't increase that risk. In fact, you're getting an extra 60 cents. So you're actually reducing the downside risk somewhat, right? Not, you have an extra 60 cents cushion. The other risk is that it blows through 24 or 25. Now, I don't really consider that a risk because you're hitting your max gain, right? Your max gain if you still 24 call is you make the money up to 24 plus that 60 cents. And then you can't make any more if it goes up. So it's just an opportunity cost, right? If it goes up to 30, you've left some money on the table. But this happens every once in a while with my clients, and no one ever complains because they've made max gain, right? So I don't really consider that, to me, I just look at the downside risk and I look for stocks that I feel have a reasonable floor. You can't predict, a market crash, but you can look at the industry and say, I don't see a lot here that's going to cause some serious downside pressure.
That's such a great example, Jane. And listen, thanks for laying that out. I think for people that are unfamiliar with how to apply that sort of trade, you've laid out pretty clearly what you're doing and how you go about it. Thanks so much for coming on today. Be well, stay safe. We'll talk to you again soon.
Thanks, Dave. Appreciate it.
That's Jay Soloff. Jay's the lead options analyst at Investors Alley. And, again, I am not an options trader. I don't trade options as part of my own investing. And I have enjoyed so much learning from people like Jay and Price Headley and Sean McLaughlin and Lex Lutheringhausen and the many that we've had on StockCharts TV that help, sort of demystify some of these things, help make it a little more accessible. So I really appreciate that walkthrough, putting a covered call trade on now for American Airlines. Great job, Jay. Thank you. Let's continue on with the final bar mailbag. As I mentioned many times, one of my favorite parts of the show is hearing from you, particularly what you're running into, questions that come up, and how we can hopefully make your experience a little better trying to navigate these markets. Question number one, is there such a thing as a scan to find stocks channeling in the $10 range or less? Really interesting question there. So what I'm going to do is I'll go to the scanning engine. So that's a bit of a tough one. Is there a way to look for stocks under $10? Super easy. So, right, the way that I would generally build scans is go to this bottom section, which is scan components. This is all a series of drop-down levels. So if you say closing price and say below $10, that's a pretty easy way to have it in there, just as a basic thing. Your question, though, is looking for stocks channeling. And I guess the answer to the question depends on what you mean by the word channeling. If you're looking for a stock that is relatively range bound, sort of in a sideways trend, there are a couple ways I could think of to do that. I would go here to technical indicators. I would look at something like the ADX line that is relatively low. So a trending market like an ADX above 20 or 25 means the market's trending. Something below 15 would be something that's relatively range bound. You could also look at the RSI that's within a certain range, like right around the 50 level, would be stocks that have sort of chopped into a sideways range. Then if you're looking for something that's more of like a channel, like a trend, that's a little tougher. That I would actually look for a high ADX because that actually shows you stocks that are trending. So there's a presence of a trend. But then for me, to be honest with you, I found if you're trying to optimize a scan too much, you very quickly optimize all the results out of it. I like to keep the scans relatively simple and then look at the charts visually and identify it. So I would look for general characteristics, screen on a universe, and use something like ADX or RSA to try to describe the type of chart you're looking for, and then go through the chart list, create a chart list from the results and flip through it. By the way, one of the great ways to develop a scan is look at a chart that is sort of your perfect chart. Here is my ideal entry point, and then look at all the technical indicators and scenarios, right? What is the RSI? What is the ADX? What are the MACD indicators doing? And use those to build a scan to try to find similar charts to sort of your ideal chart. I always tell people, draw your ideal chart, and then we can figure out what to scan on. Next question, what moving averages are the most common for looking at weekly charts? Really good question. So here's what I would say. In general, I'll tell you different strategies here. What I generally look on my weekly charts, and I'm hoping this is the case as I bring up my weekly chart. It is good. So I used the 40-week and the 150-week as sort of the two main periods that I'm looking at. The 40-week here in red is very similar to the 200-day, right? 200 divided by 5. It's not exact because it's using a little bit, it's using weekly closes instead of daily closes, but overall pretty similar. So the 40-week and the 200-day are very similar. It gives you another sense. The 150-week is a much longer term. And what I found, those are the ones that I've used more often. On top of that, my market trend model is built on weekly exponential moving averages. That would be the other thing you may want to look at as well. On Friday's show, I'll bring that up. You can see it. Let's see. Taking time. For example, is there a way to import a list of stocks and have them display like you did for the 10 major sectors? Yeah. So here's the thing, right? If you go to the market dashboard, your dashboard here. Go to your chart list, create a new chart list. There's a piece of this, make it a name. Dave is good. Create new chart list. And then at the bottom, there are a couple different ways that you can build stuff. So you can actually type in individual symbols. That's a great way if you're just adding things occasionally. If you have a list of things, you can add a bunch of tickers separated by commas. Or you can go here, which is a really cool way to build the chart list. So you can basically, we have all of the indexes, groups, sectors, all sort of linked in there. Industry groups have their own categories. So if you look under communication services, you can see our industry groups, about 106 of them that break down the different sectors into their components. Starting with that is an easy way to go about doing it. And it's a great way to sort of bring in a group of symbols. From there, once you bring up the list, it's all about figuring out how you want to display them. And the view that I always use is called the candle glance. Once you have your chart list up, these are the different views you can go through there. And I often like to bring them all up on an RRG chart, but also bringing up on the candle glance page, which is this dynamic here. By the way, if you go to StockCharts.com/videos, we have a bunch of instructional videos on things like building a chart list, running the scan engine, really basic stuff about different technical indicators, how to create a sharp chart, how to create your templates. So if you're not familiar with some of those basic mechanics of the website, that's where I would direct you to, StockCharts.com/videos. That's a great place to start. We need to wrap the show. Go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is the VIX. We talked about volatility going back up, the VIX back above 20. And this is what I was talking about. If you look at the last year or so, really since the March 2020 high, when we came back to earth, sort of in April to May, from a volatility perspective, you can see we settled into this 20 to 40 range. And that's where we spent most of our time. In previous years, like in 2019, it was more in a 10 to 20 range. It was a totally different volatility range. And in the last month, we've gotten back into the 2019 range as opposed to the 2020 range. That has now changed with the volatility index, the VIX index going back above 20 once again. So, back of the envelope is a VIX above 20 is sort of a volatile environment, quote unquote. And so I think we're getting back potentially into a period of greater volatility. Interesting, my discussion with Sean McLaughlin not too long ago was talking about the NASDAQ going lower and increased volatility. So far, his comments have been very well articulated because that's what we've seen. And I think that increasing volatility, I don't think we're in a period of lower volatility here in the near term. I think we're going to see more before we see less. Chart number 2 is Aussie dollar to Japanese yen. I was talking to one of my contacts, one of my peers in the industry, and we were reviewing Mark Darriott from Cormark, and we were talking about risk on versus risk off, and he was sharing a chart of one is his favorite risk on, risk off measures, which is Aussie yen, AUDJPY with the dollar sign at the front. This is a classic risk on versus risk off currency pair. It is very much signaling risk on, with that pair making a new multi-year high yet again this week. So while the market has pulled back, while it's gotten more choppy, the S&P is not far off an all-time high, and certain risk measures are still signaling an all clear of sorts. Where you might see some potential concern is our third chart, which is the New York FANG Plus Index, dollar sign NY FANG. Testing its recent lows around 6,000, which is a key big round number, which is also where the 200-day moving averages. I think the FANG stocks are very close to testing and or breaking down through a significant support level. It gets down through there. I think it looks similar to the ARK Innovation Fund and other charts that we've seen that have broken down through key support levels. Folks, that is our show for today. Special thank you to Jay Soloff joining us from Options Alley, sharing his thoughts. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.